I know what you're thinking right now. Alibaba stock is so cooked. With the new tariffs from Trump administration, what Alibaba sells will be more expensive, so it will hurt the company, right? Well, not exactly. If we go and dig and take a look at how much revenue Alibaba gets from international sales, apparently it's only 5%. Even if we add the whole sales to the whole mix, we get another 2%. So only 7% of Alibaba sales is to international. And this is international, this is not US. So I think we can all agree that Alibaba won't be hurt as much from the new tariffs from Trump administration. Second, with all the craziness that is going on in the market right now, Alibaba actually had a bunch of good news. So starting from the two AI agents which they have developed, one of them is outright creepy, we will talk about this one, to the reappearance of their CEO Jack Ma, to the recent stability of the company, which is very important right now. So today we're going to discuss Alibaba because when you see something like this, or even like this in the US market, I think we can all agree that it's time for us to look overseas for some stability in our investment portfolio. Hello and welcome to the Market Monkeys channel. My name is Vadim. Today we're talking about Alibaba, and let's start immediately with the new tariffs from Trump administration. So after a month of threats, Trump finally imposed 25% tariff on Mexico and Canada and 10% tariff on China. And then he got back and delayed the tariff on Mexico, and then he actually got back and delayed the tariffs on Canada. But never mind, we have new tariffs on China. And when you take a look at which Chinese companies will be hurt the most from these new tariffs, you won't find Alibaba there. What you'll find is Shein and Temu. So Shein is a private company and we don't have a lot of information on private companies, but what we know is of March 2022, Shein held 40% share of the US fast fashion market. Shein has around 17.3 million active shoppers in the US, which is between 20 and 25% of overall of its sales. As for Temu, Temu belongs to PDD, and as of September 2023, Temu had about 82.4 million active users in the United States, and 40% of their sales were to North America. So let me make here a claim which might have seemed counterintuitive just a couple of weeks ago, but now it becomes more and more clear. Alibaba won't be hurt from new tariffs as much as all of its competitors in the Chinese market. So at some level, new tariffs from US on China may be actually beneficial to Alibaba as a company and, well, to Alibaba stock. Because despite all of the news of Chinese slowing down economy, the retail sales in China have grown every month on a year-to-year basis in 2 consecutive years. And this segment, retail sales to China, retail and wholesale, I think together, they are 44% of Alibaba revenue. So this is a huge chunk, and this is the important thing for the company. If you find this information interesting or valuable, press the like button, subscribe to our channel, and don't forget that you can become a member of the Market Monkeys channel. Now let's move to more interesting piece of news, to AI news. Last week, Alibaba announced that they have added another AI model to the Qwen family of AI model with Qwen2.5 Max. And Alibaba immediately announced that the Qwen2.5 Max model outperforming peer models, including DeepSeek V3 model, on most of LLM benchmarks. The company also said that this model is already included into QuenChat, the chat that they have, and the company said that they have opened access to Qwen2.5 Max API to all of their developers worldwide. Now, this piece of news was not timed very well. We were still in deep shock after DeepSeek's revelation and kind of could not understand if this piece of news is real or not. And then immediately, a couple of days after, Alibaba comes out and they're like, we have one even better. So it was all sounding like bragging in the school when one kid comes and says that he has a new bike with power turbo engine, and another kid says, well, I have a skateboard which can fly. So it kind of sounds like that, but for now, Alibaba has the most advanced, the most well-performing model in the world. Now, what's more interesting or creepier, depends on how you look at this piece of news, is new Qwen2 VL vision language model, which can take control of users' PC and mobile phone and perform some tasks on these devices. So this is something called AI agent, which can take over your stuff and do some stuff. And we have seen already demo where this AI model goes and on behalf of users orders a tickets to some location. So I can already imagine waking up in the morning, going through my bank statements and started screaming at my AI agent, what the hell have you been doing at night while I was sleeping? And all of this seems like a great piece of news for Alibaba Tech segment or Alibaba Cloud and Alibaba AI, which had already seen some boosts recently. So Alibaba Cloud revenue edges to the double-digit growth in the last quarter, and Alibaba Cloud reported around 4.2 billion in revenue, 7% growth year over year. Management noted significant adoption of AI products and services being the reason behind the moderate acceleration in the cloud. They have mentioned that growth in our cloud business accelerated from prior quarters, with revenues from public cloud products growing in double digits and AI-related product revenue growing in triple digits. So this is great. Now, I want to say a few words about the stability of Alibaba as a company. So if you have been following the company, the news of the company in the past, let's say 4.5, 5 years, you probably know that Alibaba and all the news surrounding it has a lot of drama, a lot of like weird stuff, unexpected stuff. So just a reminder, their CEO had disappeared and then he reappeared. They have tried to spin off their payment platform, which is called Ant Group, in the IPO, which got cancelled. In 2023, they tried to spin the Alibaba Cloud division, which got cancelled as well. In 2024, they have tried to spin off their logistic division, which is called Qwen2.5, which got cancelled as well. So maybe these decisions were correct ones. We don't know for sure, but what we do know is that investors don't like instability and they don't like to be uncertain about the company's future plans. So every time something like this comes into the news, the stock of the company tanks. Now, what is good about all this is that we haven't seen any piece of news like that for the past something like a year, from March 2024. So I am hopeful the company is finally kind of okay with their long-term strategy. They know what they're doing and we won't get any shock revelations in the next couple of months. Now let's talk about stock valuation, stock behavior, and what I like and what I don't like about the stock of the company. So let's start with what I like. So first of all, the company has a lot of cash. For $223 billion market cap company, the company has around $55 billion in cash, which is a lot. Even its debt, which is not small, it's $33 billion, seems manageable and actually well covered by the cash position they have. Second of all, the company has good net income margin and good free cash flow margin, which are something around 9%, which means that the company not only has a lot of cash, it can generate a lot of cash. The stock of the company right now is priced with PE of 11, so 11 times earning, which does not seem a lot for, again, cash producing company, which kind of grows slowly, but hopefully it will pick up the pace with more focus on Alibaba Cloud and their AI developments. And Wall Street analysts absolutely love Alibaba. So for now, the stock trades at around $100 per share. The average target price from Wall Street is about 120, with the highest being 145. So definitely analysts see that Alibaba has way up to go. Now let's talk about what I don't like about the company. So first of all, the stock of the company doesn't move much. It's been stuck there between $80 and $120 for the past 2.5 years, and I don't see it breaking out and doubling anytime soon. The second thing is that Alibaba, maybe it's related to the previous point, but Alibaba is kind of too big. So the company is almost $250 billion right now. And again, if you want a company which can give you some kind of insane results, so high risk, high profit bet, Alibaba is probably not really for you. And my personal strategy of let's take a company, let's identify catalysts in the short term. So I'm looking for a couple of months, half a year, and let's buy call options on these catalysts and then just wait for everything to double, triple, quadruple. This will not really work with Alibaba. So for Alibaba, I can see kind of slow growth, a lot of cash generation, and probably the stock of the company kind of moving up really slowly, but I do not see any explosive catalyst in the future. And again, I'm talking here about adding Alibaba to my risky portfolio, so the portfolio where I take a lot of risk and where I expect a lot of profit. It's a pretty small chunk of my overall investments, so if the rest of my investments would not be invested in just a bunch of ETFs, and if I would go and pick single companies, probably Alibaba would be one of the companies I would go for. And the last thing is China as an economy is not in a great state right now, so the growth is slowing down. We have seen all of these crises about will it grow to 5% as they expected or not. The stimulus package, which Chinese government promised last year, never arrived, or was it what we saw in October? So we don't see any major macro news coming from China economy which can boost the Alibaba stock price in the near future. So I personally think that Alibaba stock is not really for me. Again, I explained why, but each person picks their own investments. If you have picked Alibaba for yourself, tell us about this in the comments. State your case. You can say something like, I have picked Alibaba because it's really undervalued and I'm waiting for the whole world to wake up and to see that the stock could double, or something like that. That's all for now. Thank you for your time. If you like this video, press the like button, subscribe to our channel, and we will see you in the next video. Take care.